The numbers flashing on the screen right now tell a story that goes far beyond a simple green percentage. At this exact moment, Block Inc., ticker symbol SQ, is trading at $65.11 USD, pushing up by 3.11 points, or 5.02% for the day. If you're watching the chart, you are seeing a classic breakout candle forming, a decisive move that suggests the market is finally waking up to a reality that has been hidden in plain sight for quarters. This isn't just a random fluctuation. This is a repricing event. The market is open, the volume is surging, and that $65 level, which acted as a stubborn ceiling for so long, is now being tested as a launchpad. When you look at a move like this, the immediate expectation is often skepticism. Investors have been burned by fintech volatility before. The common narrative, the expectation, is that Block is a confused conglomerate, a company trying to do too much with Square, Cash App, Afterpay, and Bitcoin, lacking the focus of a pure-play processor. People see the ticker and think of the volatility of 2021 or the uncertainty of executive changes. They assume this is just another beta-driven pop that will fade by lunch. But here is the reality that creates the tension. This move is likely structural. We are seeing the first real fruits of their Rule of 40 discipline and a strategic pivot that transforms them from a payments processor into a comprehensive financial ecosystem that rivals the biggest banks. The market expected a growth slowdown. The reality is they are accelerating profitability while maintaining growth, a dual engine firing that Wall Street typically rewards with massive multiple expansion. Let's break down exactly what is happening on the floor today. That 5% jump didn't happen in a vacuum. We are seeing heavy institutional accumulation, the kind of buying that doesn't care about pennies but cares about position sizing for the next 3 years. Unlike the retail frenzy that drives GameStop or occasional spikes in Tesla stock, this movement in Block feels calculated. It is a response to a fundamental shift in how the company is valuing its own future. When you compare this price action to the broader sector, it stands out. While Apple stock might be moving on hardware news or Nvidia stock on chip demand, Block is moving on efficiency. The market is finally rewarding the company for tightening its belt and focusing on gross profit growth rather than just top-line vanity metrics. To understand why this price level of $65.11 is so critical, you have to look at the psychological battleground it represents. For months, this area has been a graveyard for bulls. Every time the stock approached it, selling pressure from bag holders looking to break even would squash the rally. Today, we smashed through it. This change in character is what technical analysts call a change of polarity, resistance becoming support. It tells us that the sellers are exhausted. The people who wanted out are out. Who is left? The long-term believers and the new money entering now, realizing that at these valuations, Block is trading at a discount compared to its historical averages and its peers in the online investment space. Now let's pause and talk about the elephant in the room, the business model. If you ask a random person on the street what Block does, they might say, "Oh, that little white card reader at my coffee shop," or "the app I use to send my roommate money for pizza." Both are true, but neither captures the monster lurking beneath. Block is building a closed-loop economy. This is the holy grail of payments. On one side, you have Square, the seller ecosystem. It handles payroll, inventory, invoices, and payments for millions of merchants. On the other side, you have Cash App, the consumer ecosystem, with over 50 million monthly actives who use it to bank, invest, and spend. The magic, and the part the market often misses, happens in the middle. When a Cash App user buys a coffee from a Square merchant, Block captures the economics on both sides of the transaction. They cut out the middlemen, the traditional banks, the legacy processors. This is something Fidelity or Schwab Intelligent Portfolios cannot do because they don't own the merchant point of sale. Block does. They are building a wall around their money movement. This internal network effect means that every new user on Cash App makes the Square ecosystem more valuable, and every new Square merchant gives Cash App users more places to spend. It is a flywheel that is notoriously difficult to start, but once it spins, it is nearly impossible to stop. Speaking of competitors, the landscape is fierce, which makes Block's resilience even more impressive. You have Robinhood, which started as a trading app and is trying to become a bank. You have SoFi, which started with student loans and is now a full-service digital bank. You have interactive brokers catering to the serious traders. But none of them have that physical footprint that Square provides. Robinhood stock trading is great, and their Robinhood app is slick, but they don't help your local barber run their business. SoFi Invest and SoFi Stocks are excellent for self-investing, but they don't process payments for the restaurant down the street. Block is the only one straddling both worlds effectively. They are attacking the individual brokerage market with Cash App investing, allowing users to buy fractional shares and Bitcoin, while simultaneously attacking the enterprise software market with Square. Let's get back to the intraday action. The volume we are seeing today suggests that fund managers are reallocating. In the world of investment, portfolio managers are constantly looking for alpha, returns that beat the market. For a long time, fintech was dead money. Interest rates were up, which meant the cost of capital was high, squeezing the margins of companies like Block. But look at the macro picture now. As we settle into this new economic environment, companies that have proven they can generate free cash flow are becoming the new darlings. Block has pivoted hard towards efficiency. They cut costs, slowed hiring, and focused on profitable growth. This is the language that gets you into a Fidelity Wealth Management portfolio or a Fidelity Mutual Funds allocation. It's no longer a speculative growth story. It's a mature execution story. The Bitcoin component is another layer that adds a unique flavor to the stock. Unlike MicroStrategy, which is essentially a leveraged Bitcoin holding company, Block uses Bitcoin as a utility. They are building the rails for the future of money. With BitKey, their self-custody wallet, and their investments in the Lightning Network, they are betting that eventually the world will need a payment layer that isn't controlled by central banks. This is a call option on the future of finance. If Bitcoin becomes a global medium of exchange, Block is positioned better than arguably any other company to facilitate that. It's a hedge. If the traditional fiat system holds strong, Square and Cash App thrive. If the crypto economy takes over, their Bitcoin vertical thrives. It's a heads-I win, tails-I also win setup that savvy investors are starting to appreciate. I want to take a moment to address the self-investing crowd watching this. If you are managing your own money, maybe using Fidelity Investments or the Interactive Brokers trading platform, you know how hard it is to find a stock that offers both growth and value. Usually, you have to pick one. Tesla stock offers growth, but at a high price. Legacy bank stocks offer value, but no growth. Block is currently sitting in that sweet spot, the GARP, growth at a reasonable price zone. They are growing gross profit in the mid-teens to 20% range, yet they trade at multiples that are nearing historical lows. This divergence, price down, performance up, is the precise inefficiency that online investing tools and investing sites are designed to help you find. Comment below how many shares of Block you currently hold, or if you are waiting for a pullback to get in. I'm genuinely curious to see where the sentiment is among individual investors versus the institutional buying we are seeing on the tape today. Let's talk about the Cash App specifically because it is the engine room of this ship. It used to be just peer-to-peer payments. Now, it's a bank. You can get your paycheck deposited 2 days early, a feature that SoFi and Chime popularized, but Cash App made cool. You can use the Cash App card, which has incredible adoption rates. You can use Borrow, their short-term loan feature, which is printing money for them with surprisingly low default rates. They are effectively banking the underbanked. While Schwab Intelligent Portfolios chases the high net worth individual with complex asset allocation, Cash App is capturing the Gen Z and millennial audience that has been ignored by traditional finance. They are building brand loyalty with a demographic that will eventually enter their prime earning years. That is a long-term moat that is hard to quantify on a spreadsheet, but evident in the culture. And we cannot ignore the Afterpay acquisition. When they bought it, everyone screamed overpaid, and maybe they did at the time. But integrating Buy Now, Pay Later into the Cash App and Square ecosystem was a strategic masterstroke. It allows Square sellers to offer financing to customers instantly, and it allows Cash App users to manage cash flow. It connects the two ecosystems. It turns a simple transaction